thank you very much. Steve, excellent choice of
Thank you.
theme music. You can talk about that.
Nobody hates 50 Cent, right? Especially here. I Got Money is always a good theme at Marine Money. So,
and it's our last panel of the day. And I just want to say thank you all for coming today. I hope you had a good day. I thought it was, kind of always say this, but I think it was one of the best days ever. Sort of like summer camp, you know, best summer ever. But I want to thank you guys for wrapping it up with a look at the future. I mean, what could be more exciting? And we have a great lineup. So thank you. And Steve, take it away.
Great.
And we're going to have a cocktail hour immediately following the panel. Thanks.
excellent. Thank you. I lost my voice a little bit, so I'll try to be even more brief. As an attorney, not being able to speak is a fate worse than death, but I'll manage through. I'll quickly introduce our panel, although I think almost everybody in this room knows who they are. We have Jake Scott, Managing Partner of Clear Ocean Partners. Next to Jake is Andy Dacy, CEO and CIO of the Global Transport Group at JPMorgan. Following Marina Hadjipateras, co-founder and general partner of TMV. What is next? We've got Paul Leanne, CEO of AMA, and Ted Jadick, President and CEO of DNB. So this is actually a really fantastic panel. The last time I was sat here actually was the first Marine Money after COVID, and everything was rosy, markets were good, deals were done, and everybody was really happy. And now it's been a few years, and actually things are still pretty good. People are still happy. So I don't want to ignore this side of the room, but and we're all still happy. But we've talked about over the last 6 hours or so, a lot of different people have talked about the future. They've mentioned M&A, they've mentioned a lot of different things, but let's kind of get to the nitty-gritty and say, where do you think we are going to be in 10, 20, 30 years? What is the future? This is a broad topic, but what's going to be different in 10, 20, or 30 years than it is today? If you don't answer questions, I'm going to start randomly calling on people, so it's really up to you how you want to do it. But it looks like Marina wants to say something, so. No?
I mean, I'm happy to start. I'd say, I mean, as a venture capitalist, we're always like trying to look out and see what the future will hold. And three things that come to mind within the shipping industry are transformation, I mean, adoption and collaboration. And I think those things all go hand in hand. So we're seeing the industry transform already. I think the timing is right. But in terms of adoption of different, let's say, fuel technologies, I think within the next 10, 20, 30 years, we'll have more answers around that. Transformation, we're already seeing adoption of different ways in which we can make the industry more sustainable by aggregating data that makes the ships more efficient and therefore reducing emissions already. But within the future, we are going to have some answers around uncertainties right now. And then collaboration, I think we'll see more and more collaboration just from starting TMV back 7 years ago till now. The investors that we have within the fund and that we work with, the thought leaders that we work with, are just over the past 2 years, ship owners, JPMorgan, banks, ship owners, CVCs. Everybody's looking to invest in the right technology, not any technology. And so I think collaboration, transformation, and adoption are three things that we're focusing on and seeing in the next 20, 30 years.
Great, thanks. Anyone else? Looks like Jake.
I'd just say shipping historically is painfully slow at adopting new technology. I do think there is an opportunity for AI to really take a hold and really making freight desks and companies really efficient. AI will not replace shipping companies or the people within them, but they will make companies vastly more efficient. I do think there is an opportunity for AI to actually reduce the number of crew that are on these vessels, because really what you need crew for is loading and discharging. When you're at sea for 45 days and you're on a VL, there's not a whole lot to do. And most of the accidents happen are 99% is human error. So the AI, I think there's an opportunity to really reduce the crew size, drive down cost, and improve efficiency and safety on board vessels.
I can add a few points. I think one of the things that I think a lot about is that the supply side is going to be fairly attractive for some time to come. well-trodden points in terms of the labor issues that are being faced by South Korean and Japanese ship owners. I think we're all fairly familiar with that, but that's a very real issue, and it continues to get even more intense and exacerbated, and I think finding the labor to accelerate that has been a real challenge. China continues to become the bigger shipbuilder globally, and I think geopolitically that may become a challenge. We'll see what happens with this administration in terms of how they treat access to Chinese shipyards, but you, I think, have to, as a ship owner, think about what China's future is going to have as in regards to being a Western ship owner, because I think there could be some things to think about: access to capital, access to tonnage, and access to ships as a result. I wonder about the transformational fuel side of things. I'm a little less optimistic on that front. I think there's serious challenges that come into deploying, whether it's green methanol, whether it's ammonia, whether it's hydrogen. I think we're all pretty familiar with some of those challenges, but being able to distribute those fuels at scale, even if you manage to find engines or build engines that can actually burn ammonia, for example, safely, I think there's issues around crew, whether or not they want to work on those types of ships. And I think there's going to be a disconnect, for better or for worse, maybe for worse potentially, between what regulators think the shipping industry can do and what we can actually do. When you look about the amount of renewable energy that's being produced today and how much of it's actually going into providing renewable fuels, it's basically zero. I don't think that's going to change. So where are we going to get the renewable energy to produce the renewable fuels from? And then even if we got the renewable energy to produce the renewable fuels, how are we going to actually get those fuels to the destinations they need to be in to actually bunker the ships? So that I see as a looming issue, and I think we as an industry have to think about how we enhance the dialogue with regulators to make them as aware as we can of this potential disconnect that may come our way. But I think on the supply side, as long as demand continues to be there, it'll be interesting to see how the new administration ultimately deals with some of the tariff challenges, and if they don't become as extreme as being currently promoted, then I think that's going to be a pretty positive development for shipping. So mixture of sun and rain from my perspective.
So I think it's working. I think one of two things is likely to happen in the short term. Either first, Andy will quietly acquire all that which he doesn't own today. I could also do my Trump dance and say that global trade will end because we will manufacture everything here in the U.S. and produce enough oil to sustain ourselves. But we'll see what happens. I think what's interesting is in listening to some of these panels today, and particularly the finance panel, which I thought was the most interesting thing, is the ideas of securitizations and things like that. I could have been sitting here 20 years ago listening to the same thing. So I think the one thing about our industry, I'd say, is we tend to be very good at focusing on, I'd say, things around the fringes. And I think there are a lot of really interesting things that will be helpful to the industry. There's a lot of new technology, a lot of opportunity out there, and a lot of these companies that I think will do very well in terms of marginally increasing or marginally impacting the overall profitability of shipping companies. What we tend to look at is things that have significant changes to the value chain or value proposition within the industry. And I think that Andy sort of hit on this. I think, frankly, until you get to smaller nuclear fuel cells and things that I think will actually be available in maybe not 10 years, but 30 years, that will be a sea change in this market and other markets, I believe, and that will have a significant impact on this global trade and global industry. But outside of that, I think that, frankly, some of the things that we would hope to see, and I think we can see that will impact value, is I think that it's the governance and it's how these companies run themselves and how they make themselves available to the public markets. I believe that each of these companies has a DNA. I think that DNA dictates to a large degree how investable they are and how shareholder friendly they are. And I think if you were to look today, I think you start to see the valuations, that impact valuations even today. So I think that if I'm to look at 10 to 20 years from now, my hope is that more companies adopt that DNA, which is more shareholder friendly. And I think if you look at the discount that a lot of these companies trade in terms of NAV today, if you're actually able to capture that, I think it's probably one of the biggest value additions to the market we can look for.
I would say that shipping, for me, in my experience, it's been a story of continuous improvement over the years of my career, and I don't see that stopping. Shipping will be here in 20 or 30 or 40 years. It's an essential industry, and that will remain the case. It will be a greener industry because it is taking initiatives in many small ways, maybe some bigger ways, to become more green, to help meet some of the the targets that have been laid out for them. I share Andy's in a way. I don't know if skepticism is the right word, but some concern about the abilities on the fuel side to really bring all of that forward in a way that will allow the industry to kind of meet the decarbonization objectives that are out there today. I think a lot more is involved than the shipping industry can control itself to make that happen. But again, for me, it's an industry that I see is continuously improving in some of the ways Paul mentions. It's governance, it's making these companies more shareholder friendly. Shipping is still in the main a privately owned industry. I believe that will continue to be the case. And the private companies are doing the same things as the public companies are doing. One of the panels earlier talked about the need for consolidation. Consolidation will continue, but I'm not sure it will ever reach the stage of some of the other sectors or heavy capital goods types of sectors in terms of the more limited number of players who are providing services to the market. I think it will continue to be a relatively unconsolidated industry. But again, for me, it's about continuous improvement. That's what I've experienced. That's what I believe, the companies that we interact with, that we have as our clients, they're constantly looking for new ways of improving. Maybe it's more around the edges, but of making themselves better companies, better citizens, more investable.
Great, thank you. I guess in terms of, it sounds like you've already answered what you, or at least you've posited what you think about M&A, but what do you think the future of the capital markets holds? Is it going to be more of the same? Do you think there's going to be at least consolidation in the public space? Any differences there?
I'll go. I think the public market will continue to be a place where shipping companies will come to raise money. And will continue to be, I think the companies, again, the efforts they make to continue to make themselves more attractive to investors and investable, those will continue. At some point, I think that capital allocation decision is going to start to change more in favor of having to invest new money in the types of ships that are going to take the industry forward in the future. But I don't see that on the near-term horizon. When that day comes, the capital markets will play a role. But again, I think this industry will retain a high level of private ownership that will also sustain financing. But capital markets will remain active, and they will make the types of decisions that they make in terms of where they allocate their capital. And shipping companies will have to continue to compete for that, and I think they will.
Great, thank you. Thank you. Sorry. I guess changing topics slightly, just trying to avoid topics that have been discussed before, but taking ourselves into a more theoretical world, if assuming, Santa Claus comes down and gives you a big pile of money and says, you can only use this money in shipping. I want you to start a new company. What do you do? What do you start, and how long do you hold? What is the future? Where do you say is the best bet right now for, X number of years down the line?
I can, something I face every day. And it's not Santa Claus, it's Santa Claus that wants a return. It's a good question. And the one thing is, as everybody else was speaking, I was thinking in the back of my mind, and I mentioned how China is now over 50% of shipbuilding capacity globally, but what we also need to recognize is that Chinese-controlled shipping companies are in the mid 50% of total ships owned globally. So increasingly in the West, we're playing in a very, very, an increasingly shrinking percentage of the pie. So if that trend continues, and let's say we scroll ahead 5 years and China now controls 60% of the global fleet, then all these conversations we have about accessing capital, et cetera, are now limited to this 40% sliver potentially. So I think that is going to have a strategic impact on how we think about commercial shipping going forward and what the behavior of China is with regard to its controlled commercial fleet, because it may not be following the same financial return orientation that we in the West, let's say, do. So that's one thing to consider. But I mean, in terms of today, I mean, the one challenge that I think we've all had, and I remember being at many marine money conferences over the decades now, going back to the 90s, and you know, as Matt will attest to, there's moments of ebullience, there's moments of despair, and I guess we've been in this ebullient phase for a while. And so my itchy finger just suggests that, you know, we're going to potentially start to sort of maybe go into the cyclical nature of this business. Now, that's going to have to be demand driven, but I mean, the problem right now is that ships are expensive. So what do you buy in a market that is elevated, arguably? But then you think, all right, not a lot of shipbuilding capacity. You have to convince yourself that these new levels we've been achieving from a new building price are going to be sustainable. Not that we've ever really experienced that historically, but who's willing to make that decision? And I guess that's something that we struggle with, because the shipping fleet will need to be replaced. This big surge of ships that were built from 2001 until 2008 are now getting older. The 01 ships will be 25 in a couple of years' time. So we're going to start to see more requirements for replacement. Shipbuilding capacity is tight. So probably ship values will still stay elevated, and it's us on the investing side that have to say, all right, I'm willing to spend 45, 50 million bucks for an MR that historically has cost me 30. And that's just the decision that has to be made. And I suppose, not to ramble on too much, but when you think about the global fleet, that whole fleet is not representative by these new buildings, these new building prices, right? We have an average cost of the fleet. So take MRs, for example, right? They used to be 28 million at the bottom of the market. Now they're up to 50. Maybe the average is 40. The charter market's going to price off the average cost. And so if you buy a ship that's 50, you're probably going to be running behind the 8 ball for a while. So I find it to be very challenging to figure out exactly what to buy right now in traditional commodity shipping.
So we just made the big plunge. We raised a fund and decided that the supply-demand dynamics around the offshore space were super interesting. So we've gone out and acquired a number of PSVs and some offshore construction vessels, and are looking to expand into that space even further. But you can't be in shipping and in assets forever. You have to buy and sell and get in and out of sectors advantageously. So to say that you're going to buy an asset class and hold it forever, that's just I don't see how that's viable. But if you do want to be in shipping forever, buy a pool company. It provides you a seat at the table. You have a huge amount of optionality. You see a ton in the marketplace, and it gives you an ability to deploy capital throughout cycles and see opportunities that other owners don't see.
Marina?
I think on my end, looking at the early stage of things, I think there's still not a lot of capital around globally to invest in early stage tech companies that really truly can be transformational for the industry. And so, I mean, I would allocate more capital to that, but strategic capital, not just capital, because a lot of companies can obtain that and then scale way too fast, which we know this industry isn't receptive to. And then the company ultimately fails, even if it's a good idea. And so I think the strategic capital, which really means either you have investors with you that are working and want to partner with the companies you're investing in, or you're partnering with, let's say we partner with like the Port of Hamburg, or lines out of Japan, or MOL, or Mitsubishi, or Marubeni. They all want to know what we're looking at, not just what we're looking at, but what we're investing in, because they want to maybe have POCs on their vessels, and ultimately, maybe convert into contracts, which is the goal. But that takes time, and so I think there needs to be a little bit more, or a lot more, early stage strategic capital. And then the next thing I'll also say is, when those companies have converted those contracts and they are growing, I think that there is a little bit of a gap between the growth stage capital that's general, that can maybe from banks or anywhere else, and us as early stage investors, and that hasn't been answered yet in terms of that gap. Where do those companies that we've invested in, but we invest 1 to 5 million in very early stage companies below 50 million in value, and then where do they go next? There needs to be more capital in that area too. So I would bring something together to create sort of a multi-stage fund, probably.
So it is a commodity business, right? And I think it makes it very difficult. And I think that the problem with owning a shipping company is the fact that at any point in time you should be short to the market. And by owning a shipping company, that makes it very difficult. I'll never forget one of my first Eagle board meetings, my very first Eagle board meeting, when the CEO looked at me and said, "Well, but the market's going to collapse." And I said, "Well, why don't we sell everything then and take the cash?" But it was from a practical perspective, it was very difficult, and it was very difficult. It would have been the right decision, by the way, because he was right. But when you own the company, it makes it very difficult. I think one of the things that one of the biggest dynamics that changed in our industry is watch the oil majors. When all of a sudden the oil majors decided that, particularly in the offshore sector, that it was a commodity, right? Then all of a sudden the 4, 5, 6 year contracts disappeared. And all of a sudden they're looking for 1 well, 2 wells, 3 wells, and the entire dynamic changed in terms of the value proposition of it. If you were asking me to invest a lot of capital, I like the Jones Act. I think it has all the attributes that people have described here in terms of the overall supply issues. I think it's a protected trade, so it's a microcosm. It's got other aspects in terms of tax benefits as well that you never invest on those bases, but it's a nice to have. But I think that's an interesting place, and it's probably a market that's a little bit more controlled than the overall commodity market. In the commodity markets, you've got to be at any point in time you've got to be a seller or a buyer for that matter. And I think that's very difficult to do as an owner. It's much easier to do as a trader.
Thanks, Paul. You mentioned the Jones Act, and shameless plug, which everybody has to do at least once when they're sitting on the panel. We've actually, our phone's been ringing off the hook for Jones Act deals, so I think you're spot on with that. And I know that we're getting towards the end of the time here, but and I think you guys were all smart not to wear any ties because I know it's polarizing nowadays. But speaking of the Jones Act and the U.S., how has the recent election going to affect shipping, at least in the short term?
If the wind farm market in the U.S. wasn't dying, it's going to die very quickly.
Short and sweet. Anyone else, or we could?
I think he's 100% right. I think overall, I think it's good for shipping. I think you're going to see more global trade, more exports. I think I think you're going to see financing costs come down, capital market. I think overall, I know it disappoints a lot of people, but I think it's actually going to be a pretty good boost.
I would just say that I think it just comes down to, particularly in the container shipping market, I'm not too concerned about the tankers or the dry cargo market, but how realistic is 100% tariffs? And is that just campaign rhetoric, or does that have some teeth?
I think as far as the Jones Act is concerned, the comment that James made on the offshore wind, because that has been a major factor in driving, transactions, investor interest, tangential businesses that support all the logistics chains. So that would take some shine off.
There's been a recent push, obviously, in I would say the industry, in society, kind of an ESG push, which a lot of us have been part of. Do you think this, do you think the new administration is going to pull anything back, or that's going to continue the same way that it's been continuing before?
I think it's already changed, hasn't it? I mean, I think it's. We spent a lot of time on this at Eagle. I think that I would tell you that Gary Vogel was very focused on these issues, but I mean I think it's regulatory driven, right? And that's on the globe. That's not determined by the U.S. It's a global it's regulatory driven. I think that's on a global basis, not the U.S. And I think that. But I think what we realize is it's a good thing to explore. It's a good thing to have as an objective, but it's a tax. And I think in the end of the day, people will determine how much it's really worth. And I think that that's the struggle you're seeing with all these technology, all these other issues that you have out there, and that is it's all fine, but at what cost?
My view on ESG is it's just a good way to run your business. And again, it's part of what my initial comment about shipping and continuous improvement. I see shipping companies, addressing these issues. The environmental, the E is the one that always gets focused on. The other elements are equally important. Certainly the governance is hugely important when it comes to sustainability, investability, being an attractive place to work. Being a place that customers want to do business, a company that customers want to do business with. So is it a tax? I don't know. To the extent there's regulation that is mandating things and creating extra costs, maybe that you can call a tax. But for me, it's just common good business sense to conduct your business and develop your company, in ways that are consistent with, the big three letters.
Yeah, I tend to agree. I mean, even I think on one of the panels this morning, ESG, is a requirement. Sustainability is a requirement now, and it is a good way to run your business, I believe. And I think you'll sort of lose out if you don't focus on that while you're, operating and running your business with your clients. I believe, or at least I know from my Dorian days, that we would have if we didn't focus on eco-friendly shipping. And so I think what we're looking at is just ways in which, like 80% of terminals right now have some form of advanced technology and smart technology. And that ultimately also means that they're becoming more sustainable. It goes hand in hand. And so we just see it as the way things are transforming and working, as well as the fact that regulations are being put into place, and we need to meet them. Owners need to meet them by certain time periods. I mean, but it's just a good way to run things, and technology is helping to promote and enhance and sustainability overall.
I just might add that let's not lose sight of the fact that some of the traditional technology has really come a long way, which speaks to what Marina was talking about in terms of, if you look at traditional diesel engines over the past 15 years, the efficiency has improved dramatically. We're probably up 40% from where we were in the late 2007, 2008, and that's just keeping it diesel but electronically controlled. I think also, the fuel issue, as I mentioned earlier, I think has big challenges, but we should certainly keep in mind that all the other components that we've talked about. One thing that we've been deploying on some of our ships is some AI technology to modulate speed underway. Typically, a captain or a master will just go 12 knots and leave it in that gear when they're going for a long stretch, but you'll have current changes, weather changes, where you can modulate, and sometimes the ship will be going 13, sometimes it'll be going 11, but if the AI, so somebody's not sitting at the helm all the time and trying to adjust the throttle accordingly, we'll bring it up, we'll bring it down, and that's about a 5 to 6% savings depending on weather conditions. So one real world example of how that has an impact on fuel cost and fuel emissions.
I've always struggled with ESG as an investment thesis. But that said, I think, from a corporate governance standpoint, strong corporate governance will drive capital markets. The public companies that have strong corporate governance will attract investors, and those that don't will always struggle. On the environmental side, there are very simple, cost-effective ways to reduce emissions and reduce fuel spend. Whether it's, we just put all of our ships through dry dock, or many of them over the last 2 years, put new coatings on the hull. We've added energy-saving devices to reduce wakes, all of which have, when you add it all up, it ends up being somewhere between 8 and 12% saving on fuel. And it's not a big premium while you're in the dry dock to just do that. And I think it's part of where shipping needs to go is look at things and really use pragmatic solutions to the environmental side, rather than trying to find the silver bullet and just go 100% green, because I don't think there's a solution there.
Yeah, I'll simply say.
Control.
Sorry, go ahead.
No.
I'll simply say that 2 years ago when we used to canvass New York for money, I'd say that every single fund we went to had a green-only fund or something along those lines, and basically that was a requirement to have it, and shipping was out in the lottery. You had to be targeted. It's gone. right? So I think that ESG as a gating issue in terms of raising capital and things like that, it's already on the wane. I think that everything that everybody has said is exactly right, but frankly, it makes economic sense. It makes economic sense to burn less fuel. It makes economic sense to put better coatings on your ships. All those happen to help the environment. I think that's great, but I think that in terms of being a pillar of investing and access to capital, I think we've already seen the markets make a decision on that.
Ted, was there something that you wanted to say? Or
I was just going to say that the silver bullet is not in shipping's control. I think doing what you have under your control are the types of things that several of you have spoken about, which do create these efficiencies, reduce fuel consumption, and therefore emissions. So.
I also think a few years ago, the market was completely oversaturated with different types of options for ways to invest in ESG, to your point. Like, there was so much that we saw and that came across our desks. And now I think that it's been a little bit filtered. And so what we're seeing now are more viable options of companies that we would invest in. But there was this bubble of like every company that was just focusing on some type of green, technology or ESG. And so, yes, I think it still exists and it's still pertinent and important. It's just things are different now. And fewer companies, but better companies.
Great. Well, with literally 5 seconds left on the clock, I think I understand that we're in the way of drinks. So unless anybody has any parting thoughts that they want to add, I want to thank the panel very much for their candor and for making me speak as little as possible, which is appreciated.